Hello everybody, this is Lara with your weekly video for Bitcoin for the week beginning Monday 18th of July. I'm recording this later in the evening on Monday, and I did want to wait a little bit longer because price was moving higher, and on stock charts data for the session of Monday the 18th, price has closed above prior resistance. So that's affected a classic upward breakout from the consolidation that was identified for Bitcoin last week. This supports the main Elliott Wave count, so there's a little bit more support now. I've got a new alternate, and if that's invalidated, we can have further support for a bullish Elliott Wave count. The Elliott Wave count still expects that Bitcoin is in the very, very early stages of an absolutely huge third wave up. This is very bullish. I went over monthly charts, I think last week, and I've linked back at the start of the article to the previous monthly analysis, which has got text charts and video for you. But Elliott Wave is fractal. You have to fit the weekly chart picture into the monthly chart picture. On the monthly chart, I have cycle 1 complete at that December 2017 high, and cycle 2 complete down here, an 84% correction of cycle wave 1, a huge reduction in market value, the end of a huge bear market here at 3191.3035 in December 2018. When 2 ends, 3 begins. Cycle wave 3 may only subdivide as an impulse, and that will be labelled at primary degree 1, 2, 3, 4, 5, and it will have to meet all of those core Elliott Wave rules for an impulse. 2 may not move beyond the start of 1 below 3191.3035. 3 has to move beyond the end of 1, and it has to move far enough above 1 to allow 4 to unfold and remain above 1 price territory. 3 may not be the shortest out of 1, 3 and 5, and 3 may only subdivide as an impulse. When 4 is complete, 5 must subdivide as a 5-wave motive structure, and not a rule but a guideline, it usually moves beyond the end of 3 to avoid a truncation. And apart from this example here, in Bitcoin's previous price history, the 5th waves are usually a lot longer and a lot stronger than the 3rd waves. That is especially so when this is a 5th wave to end a 3rd wave impulse 1 degree higher. So in more simple terms, what I'm trying to say is I expect primary wave 5 to be very, very strong and a long extension of primary 3. So this is a very, very bullish wave count. Let's look at this shorter term picture. And we're trying to answer the question, is this bear market here over for Bitcoin or not? Primary wave 2, if it's over here, is a 78% correction of primary wave 1. That's very close to the really common range of about 80 to 90%, the prior actionary waves. Bitcoin's bear markets tend to be very deep. If primary 1 is over here, it's lasted 52 weeks, and primary 2 lasted 32 weeks. This has got really good proportion. Bitcoin's bear markets do tend to be more brief than the bull markets that they correct. If primary 2 continues lower though, the normal range would be from 80 to 90% the length of primary wave 1, from 16310.97 to 9751.14. I have 3 wave counts at the daily chart level looking at. The first 2 will look at 2 different structures for primary 2. The first one will consider it as a double zigzag, this high up here, this possible end of primary 1, this point up here. First zigzag, then double, labelled intermediate W. The double is joined by a 3 in the opposite direction labelled X, and the second zigzag in the double labelled intermediate wave Y. There's a good look between the first zigzag and the second zigzag, and overall this has a good fit and a pretty good look. If primary 2 is over here, then within primary 3, neither minor 1 neither minor 2 nor intermediate 2 to come can move beyond the start of minor 1 or intermediate 1 below 17708.623. This is a very bullish wave count, and so I'm going to use a channel in the first instance and then a price point in the second instance as indications for confidence for this wave count. If this channel is breached by a full daily candlestick above and not touching this trend line, I would have some reasonable confidence in this wave count. After that, if we see a new high above 26,350.49, I would have quite strong confidence in this bullish wave count. Draw this channel around the zigzag of intermediate Y using Elliott's technique for a correction. Draw the first trend line from the start of A to the end of B. Place a parallel copy on the end of A. C overshot the channel. That's fine. That's actually pretty normal in markets with high volatility. Price moved back in the channel, and this is around about where pullbacks have found support. Now we're waiting to see if price can break above the upper edge of this channel. This expectation for a price point for primary wave 3 to meet is not a target. This is a minimum expectation. Looking back at Bitcoin's price history with a full Elliott Wave count, I notice the length of its large degree third waves in relation to its first waves ranges from 5.71 in the shortest instance to over 50 times in longer instances. And so, given that prior range for third waves, I expect primary 3 to be at least 5.71 times the length of primary 1 at 392,275. It could, of course, be quite a lot longer than that. This is a minimum expectation, not a target. At the daily chart level, this is the same high, end of primary 1. Now I'm considering a different structure for primary wave 2. What if it's unfolding as a single zigzag? We could have A, B, and C could be incomplete. The target is for intermediate C to reach equality in length with A at 12,417. That would bring price right down to within that more common range of 80 to 90%, although if it's over here, it's pretty close. Intermediate C is unfolding as an impulse with minor 1, 2, 3 and 4 should be complete here, although not shown on this data that I've imported from Yahoo Finance, but I can see on stock charts data we've got a new high above this point, so minor 4 has to be continuing further sideways, and it's going to start to now not have good proportion with minor wave 2. In Bitcoin's impulses, its fourth waves are quite commonly more brief than its counterpart second waves, and so when within your wave count the fourth wave starts to be much longer in duration than the second wave, the probability that that's the correct wave count must necessarily reduce. If minor 4 continues further, it may not move into wave 1 price territory above 26,350.49. That's why invalidation of this bearish wave count would give me confidence in the bullish wave count. Within intermediate C, 1, 2, 3 is shorter than 1. That's really important because it tells us for this wave count 5 is limited to no longer than equality in length with 3 at 7773.701, so that the core Elliott wave rule stating the third wave may not be the shortest out of 1, 3 and 5 is met. At the weekly chart level, my main wave count sees primary 1 over here, but this alternate sees intermediate 4 complete now as an expanded flat and primary wave 1 incomplete. This is also possible, but here intermediate 4 lasting 61 weeks is quite a lot longer than intermediate 2 lasting 37 weeks. The probability of this wave count is reduced. It is absolutely valid. I'm just ranking it at a lower probability than the main wave count. I will have to run this weekly alternate alongside the main weekly wave count probably for months yet, and we won't know until the next impulse up is complete and possibly the following bear market begins for Bitcoin. We won't know which of those two is correct. We have to consider both possibilities. And so primary 1 could be incomplete as an impulse with intermediate 1, 2, 3, 4 and 5 still to complete. If 4 continues further, it may not move into 1 price territory below 13,826.76. Okay, classic analysis now. At the weekly chart level, here's the last completed week. This is just the one session. This last weekly candlestick is incomplete. The last completed weekly candlestick is a doji, overall downward movement, in that there's a lower high and a lower low. But the candlestick's closed as a doji, so mostly really sideways movement within this little consolidation, really not telling us much. On balance volume is also within a consolidation, and price volume so far is mostly flat with a slight increase for this mostly sideways session, but a little bit downward. So I think we should look inside the week daily candlestick bars to get a better picture of the short-term volume profile. At this low, there's a good long bullish lower wick and a selling climax. Those two things will often, not always, occur around sustainable lows. It could be an interim low, it could also be a sustainable low. We have to be open to both possibilities. Now price has moved above prior resistance at 19,870, that should provide support. I'll be looking out ahead though. If price continues higher here, there's very strong resistance, about 29,000, which may initiate a pullback if there is a new upward trend. No signal from on-balance volume this week. RSI back in neutral territory. There was no bullish divergence at this low. That doesn't mean it can't be sustained. I've carefully looked back at prior sustained lows, and there isn't always bullish divergence between price and RSI. When there is, you can have a bit more confidence, but when it's lacking, it doesn't mean a low can't form. And that's one reason why Bitcoin's lows are so hard to identify, much harder than the highs, which do usually have some bearish divergence. ADX is still increasing with the negative DX line above the positive. It's still telling us at this time frame there's a downward trend. This is a lagging indicator. It's based on a 14-week average, so if there has been a trend change, it won't catch up for several weeks yet. ATR declining as price moves lower is normal behaviour for this market. Stochastics is still oversold. I'm adding in money flow index. It's a little bit more sensitive than RSI. It won't always give us any information that RSI isn't going to give us, but there are occasions when it can be a little bit more sensitive and exhibit divergence when RSI does not, because money flow is adding in volume. They're both telling us the same thing though. At the low there was no divergence and they both reached oversold. Not that common though for RSI to reach oversold at the weekly chart level, and so that is a little bit bullish. It's suggesting that this could be a long-term sustained low. And I'm leaving here on the weekly chart the correlation coefficient between Bitcoin and the S&P. A lot of people seem to make an assumption these two markets should be correlated. The correlation has broken down quite substantially before, and so we have to accept the fact that if it's done that before, it can certainly do it again at any time. There is currently a fairly strong positive correlation between these two sets of data, but we cannot rely on that continuing, because the math tells us it hasn't before. At the daily chart level, there was a consolidation here with resistance previously at 21,400, support about 19,000. This session here of the 18th has affected an upward breakout above prior resistance, which should now provide support about 21,400, and it's done so on an upward session with push from volume. This is a good solid classic upward breakout above resistance. I would expect this is probably likely now to provide support. I'd expect price to move up at least a little way and then probably see a curve and a back test of support around about 21,400, probably not perfectly at this price point, but around about this point before price is ready to move up and away with more strength. Let's see how that one behaves. That's pretty typical behaviour after an upward breakout. On balance volume has a weak bullish signal, a weak break above weak resistance. Well, the break is clear, but the resistance line is a very weak line. It's got only the minimum required 2 anchor points you need to draw a line, and so low technical significance. A weak bullish signal here. ADX is declining still after reaching very extreme for the previous downward trend. The positive DX line has crossed above the negative, indicating a potential trend change to up, but ADX won't indicate an upward trend until the black ADX line is rising. That's not the case yet, so there's just this potential weak signal here. RSI neutral, there was no bullish divergence at the low at either time frames. Stochastics also neutral, ATR declining as price moves higher now. That's okay. Bitcoin's early stages of a new bull run historically do start out with declining ATR. That's pretty normal behaviour for this market. There was no bullish divergence at the daily chart level at the low between price and RSI. Again, this is why Bitcoin's lows are so very hard to identify. They often lack that divergence we use to look for weakness at the end of a movement prior to a trend change. Not RSI, money flow. So neither RSI nor money flow exhibited any bullish divergence down here. And money flow also neutral, not giving us a signal at this time frame. That's all from me with your Bitcoin analysis this week. I hope everyone had an awesome weekend.